is Elfreda Jonker. I'm the Client Portfolio Manager at Alphinity Investment Management. Today I have Jonas Palmqvist with me all the way from Singapore today. Jonas, you are at the Morgan Stanley APAC Annual Summit in Singapore. Can you give us some highlights, what's happening there on the ground?
I mean, the messaging around global equities and markets in general is mostly positive. You do have positive global earnings growth. Central banks are easing. The US election is behind us, even though there are new question marks, obviously, about the future following on from that. And it all kind of aligns with our work on the global earnings cycle that is still positive. However, we have to acknowledge that earnings cycle is 1.5 years old. It's maturing. And also keep in mind that the global equity bull market is over 2 years old now. So we are going to get hit with these tariffs most likely next year. And let's see what they do to earnings, what they do to economic growth. There is some policy uncertainty. So we can't rule out that at some point during 2025, we'll be having more of a cautious debate around market directions.
And on the topic of cautiousness, what were some of the highlights that's recently come out of the third quarter reporting season, and particularly then also the outlook statements from the respective companies and sectors?
We would call the Q3 earnings season okay, but it's largely thanks to the US. US companies, nearly 70% of them beat expectations. Europe, emerging markets continue to lag, weaker earnings picture there. And also what is interesting is that the earnings revisions post the reporting season, they have been positive, so that's important, but it's not broadly positive, and the earnings revisions are not huge from that perspective. So I think our conclusion around the global earnings cycle is it's still positive, but it is one of the weaker and more mixed earnings recovery cycles that we have seen over the last decade.
So one of the things that you mentioned earlier is that we have started to see a little bit of broadening out, and in particular in our global funds, we have been adding a bit more cyclical exposure. Can you tell us what your views are around the cyclical side of the market, and in particular commodities? Just referencing a note that you've recently written on commodities and the fact that you don't necessarily have the classic metal and mining exposure in that space.
Yeah, with that backdrop that the earnings recovery cycle is unusually weak and mixed, I think cyclical investing has been more tricky in this cycle. And I think the material sector, which is one of the most cyclical sectors, is no exception to this. And we have added exposure. We own more exposure in the portfolios to the material sector, but the type of stock we've invested in is not your traditional materials, metals and mining company. In fact, I think they've got more similarities with stocks in other sectors, more quality compounders with structural growth, higher margins and less volatility in earnings. And some examples would be Sherwin-Williams, the leading North American paint manufacturer, an incredibly strong North American distribution network. And I think when you analyze that company, it looks more like a successful consumer brands company rather than materials company. Linde, the leading global supplier of industrial gases, is another material stock that we own and have owned for a little while. They have a really strong grip on the customer base and very strong pricing power. And it actually reminds us more of a defensive industrial compounding story. And then in the sustainable fund, we own a company called Novonesis, which is a relatively new company. It's a result of a merger early in the year. They do biological solutions across a number of different client segments. So largely, it's about replacing chemicals, traditional chemicals, with natural biological solutions. Now, if you look at that business, it's actually more of a consumer biotech company rather than a traditional materials company. So I think when you add it all up, yes, we want to be in cyclicals, but the way we've approached the materials sector at this stage of the cycle, at least, is to not be in the conventional end, the highly cyclical end.
Well, that makes complete sense. So thank you so much for sharing your time all the way from Singapore. Appreciate it. And all the best with the rest of your research trip.
Thank you. Thanks.
Thanks for listening, everyone. And for more information and a look at Jonas's note, please visit us on alphinity.com.au in our Insights section. Thank you.